Hi, Mehdi, SocGen. Welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. We are here with Adam Blumberg, co-founder at Interaxis. Adam, welcome, sir. How are you?
I'm doing great, Mehdi. What a great week to get together and talk crypto.
Well, you know what? With the price of Bitcoin where it is, no wonder why you got that smile on there. Where's the Lambo?
Huge,
Uh,
huge grin. It's being parked out there by my driver.
there you go. So yeah, obviously, there's been a lot going on in the world of Bitcoin, which has obviously had a roll-on effect on other crypto assets. But before we dive in, don't forget to like and subscribe if you want to stay on top of our content. We're comfortably through 5,000 subscribers, so thank you very much for your support. And always feel free to drop us a line if there's anything in particular you want us to talk about, and not just talk about Bitcoin. But before we start diving into some of these stories as well, we've obviously we put out, I guess, 4 or 5 weeks ago, we did a special just on Bitcoin. So I'd urge our viewers to go check it out. If there's anything you don't really know about Bitcoin, or you've been living under a rock for the last 10 years and specifically the last 4 or 5 weeks where everyone's talking about it, but go check out that video to bring yourself up to speed on some of the nuances around Bitcoin and why it's so interesting to everyone. So get on that. But Adam, so ETF frenzy, is this all it is? Is it all about the ETFs now?
I think it seems to be. There's not any new economic news. I think it's just this combination of we're getting closer and closer to those dates. The SEC is talking to more of these ETF companies about their applications. There are amendments being filed, and as we've talked about over and over, Mehdi, I don't think the SEC is talking to these companies and they're filing amendments to their application without it being pretty imminent that this day is coming. And it looks like it's going to be, first couple of weeks of January that there's going to be BTF approvals. And as you and I have said, there's a limited supply of Bitcoin out there. And these ETF companies, the market makers, are going to have to buy quite a bit of it in order to satisfy the demand for the Bitcoin spot ETF.
Well, and one of the things that's come up along the way and a lot of conversation is obviously even Grayscale, right? So Grayscale has a certain amount of Bitcoin, sorry, but within their trust, if they do get converted to an ETF, which a lot of us believe will happen, they're going to have to play catch up as well. So the AUM that they have under the Bitcoin trust to convert it to an ETF, they've got to go out and buy Bitcoin as well. So it's not just the new entrants to this market; it's the guys that have been sitting there and accumulating assets anyway. So there's a lot of demand that could be potentially bottlenecked to rip into this thing.
Yeah, I think there is. I think there's a lot of pent up demand waiting for it. And I was talking to some financial advisors yesterday about this, about where all that demand is. And I said, look, it's in IRAs, it's in a whole bunch of retirement plans, people who wouldn't have had access to it before. And now that it's going to get a QSIP number, now they're going to get exposure to Bitcoin price through the spot ETF. And it might be people dabbling with 2-3% of their portfolio, which in the grand scheme of things, from an allocation perspective, isn't all that much. But when you look at something like $17 trillion that's locked in retirement plans in this country, 2-3% moves the needle pretty well.
Wow. And we know the size of the market of Bitcoin right now. It's not really massive, and neither is the whole crypto industry. So that implication is really quite significant, much more so than on a lot of the other assets, especially in the equity as well. So stay on top of it. Adam, talk us through some of the conversations that are going on between the SEC and these Bitcoin applicants, so the spot ETF applicants. Is there anything of significance that's coming up on it? I know they've been talking about the Franklin Templeton one. They've been talking with Grayscale. They're obviously talking with BlackRock. So all these conversations, as you alluded to in your opening statement, they're happening, right? Which obviously means that there's a lot of there's a lot of thoughtfulness coming in from the SEC. We as bystanders feel that this is making things much more likely to get approved because it's question answer, question answer. We progress forwards towards a final solution, probably in the positive stance. Now, in what you've seen, is there anything that kind of raises your neck hairs where you're a little bit nervous that this doesn't look right, or is it all pretty run of the mill stuff that you're seeing out there?
I feel like it is. And I'm not by any means an ETF expert, but everything seems pretty run of the mill, especially when you think about the fact that this is a new asset class. This is not something where they could copy and paste from what they've done with other ETFs and go, well, we had the 2x leveraged NASDAQ ETF before, and we're going to do the same thing with the Russell or something like that. This is completely new territory because the SEC and all these companies are having to go back and forth with who's going to be the custodian, what is going to be the indication for price, what's going to be the oracle we use, or where are we going to get the price feeds from? How are we keeping everything safe and secure? How are you going to custody those assets? Who are the market makers? They're having to go back and forth on this because this hasn't been done before. There hasn't been obviously a regulated product that is a spot Bitcoin ETF where the companies are actually going to have to hold that asset. This isn't a futures ETF that settles in dollars. This is not GBTC, which is a very different type of asset from Grayscale. This is something that hasn't been done before. So there's a lot of back and forth. I don't know that I can point to any time in history, the ETFs where that has happened, where you've taken an asset that hasn't really been regulated in the past and go, we're going to build an ETF around it, even though that asset hasn't really been regulated. The exchanges haven't been regulated that much. If you ask me, the only thing that honestly gives me a little bit of pause, and I can't believe I'm saying this, is if you look at the list of who's going to be the custodian for most of these funds, I think on 8 out of the 12, it's going to be Coinbase. So you're going to have one kind of major crypto custodian who's going to be handling the Bitcoin for all of these funds for, again, 8 out of the 12. And I think of those, they're going to be some of the biggest. The only one that's really going to custody themselves is Fidelity, because they've been building out this custodial system for a while. So that's where you go, all right, that's a lot of risk sitting there with Coinbase, right? Because that's going to be those are going to be the wallets where all this crypto is going to be held.
Now, let's dive into that a little bit here, right? When you say concerns, I step back. I think Coinbase has been doing everything really well, from dealing with regulators, being very open about where they stand on their assets. There's been a lot of transparency around the way they run their business, and they are, as I say, working with regulators on next stages and where to go and how to custody and everything and all that side of stuff. That's great. Are your concerns more about the fact that that makes them more of a target for nefarious players in the market, where they sit there and go, well, you know what, Coinbase has got 75% of all the custody Bitcoin for all these ETFs. Let's go at it. You got North Korea, you got Russia, you got all these guys who might sit there and start trying to pick away at them.
What I think it does. I mean, that's a piece of it, right? But I have quite a bit of faith in Coinbase, in their ability to custody assets and keep everything safe and secure and keep them separate. So it's not like someone's going to be able to hack like one password and they're going to steal, 50% of the world's Bitcoin or something like that. They're going to have things very separate and segregated. And that's why these fund companies are choosing Coinbase. And that's why the SEC is saying it's okay to use Coinbase, because they're going through these measures. I think what gives me pause, again, Mehdi, being somewhat of a purist, is that is an incredible amount of centralization, right? That is Coinbase really controlling so much of the Bitcoin market, because they can all of a sudden go, we're going to increase fees, or we're going to do something different, or we're going to start lending, whatever it is they choose to do. They're going to have such an outsized amount of control over at least the US Bitcoin market because of that. And that's, I'm not saying they're going to, and as you've said, they've been incredibly great for the industry. They've everything they've done, it seems like, has been in a positive direction. It's been for the good of the industry. But I think it is quite a bit of centralization for an asset, for a technology that is built on decentralization.
I hear that. So while this frenzy in Bitcoin has been going on, there's been a lot of people, we talked offline about this, but a lot of people come out of the woodwork and suddenly they've been holding Bitcoin for 6 months, a year, 2 years, 3 years, whatever it is, and they were very quiet when things were in the winter months or years. But now everyone's very vocal, and one of our friends that's been very, very vocal consistently is Mr. Michael Saylor, from MicroStrategy. So, Adam, he now holds, I believe, 174,540 Bitcoin. and his average price is something like 30,250 or something. So, he's had a pretty significant run over the last couple of weeks.
Yeah, it's MicroStrategy stock is way up, obviously, because that's a huge, that's most of it right there is their treasury is in Bitcoin, which is up significantly this year. So yeah, he's doing well. And look, he's been talking it, through the bull market and through the bear market. And he's been buying it at different points. And when he was buying it, 50, 60,000, we were saying, I can't believe he's doing that at that high price. But he was also buying down in the 20s and using some leverage to do so. So he is a full-on believer in it. And anyone who, doesn't, since we don't have an ETF, you could have just bought MicroStrategy stock and been moving up with this as well. And know full well that Michael Saylor's probably just going to keep buying.
That's it. He's definitely been consistent.
Yep. And to that point, Mehdi, and this is something else I was talking about with other advisors yesterday, was I think the what we think is the imminent approval of the spot ETF is going to be that moment when the government kind of let go of the reins a little bit, not so tight about it. And I think we're going to see more corporations start buying Bitcoin and putting it on their balance sheet. One, for the inflation hedge purposes, store of value purposes, and two, for the efficiency of it. Meaning, if you're a corporation like Apple and you have to have entities all over the world, partially for tax reasons, they're able to have maybe one or two Bitcoin wallets that can move funds back and forth around the world if they need it. And it's being held in an asset that, is a store of value and inflation hedge. So I think you're going to see more corporations start to do that after the SEC has kind of said, well, if it's good enough for a spot ETF, it's going to be good enough for corporations to hold it on their balance sheet. Because why are all these corporations going to hold a whole bunch of cash when we all know cash is losing value, and we know all those corporations are going to have to continue to pay out expenses for years, and those expenses are going to continue to rise? We've already seen it with supply chain issues. We've seen it with materials going up in price. So why wouldn't they want to own an asset on their balance sheet that is incredibly liquid, incredibly transparent, and that can maybe protect them against some inflation?
Well, we've talked about that, on and off over the last 2, 3 years. It'll be nice to see some of this actually coming to fruition, and it's starting to make more and more sense, especially with this evolution into a spot
Yep.
ETF. So keep on watching. Adam, a little aside here. So moving away from Bitcoin for a moment, our friends in France across the water, SocGen, Société Générale, have issued a green euro-denominated bond on Ethereum. Talk us through this, because this is all they've kind of got their fingers in a couple of pies, and we'll add on to what else they're doing. But talk us through this green bond issuance.
Yeah, so I mean, SocGen, as we've said, has been pretty forward thinking in terms of blockchain technology and crypto, and so now they've on the Ethereum blockchain they've issued this green bond. So it's basically just a bond. So you and I pay for it. We get we put money in, we get interest. But the nice part is, because of all the transparency, they're getting to show us how much the carbon footprint of the bond, because it is being held, it is being denominated on the Ethereum blockchain. It doesn't have to be processed with servers. There's not going to be paper that goes back and forth to pay you. They're going to pay the interest probably on chain, and therefore they're actually going to show us how much they're going to save by issuing this bond, how much energy they're going to save, how efficient it's going to be by issuing this bond on the Ethereum blockchain. And it's not a tremendous amount. I think it's like a $10 million bond, 10 million euros, $10.8 million, 3-year maturity. But a lot of this is them kind of experimenting with, can we do this? Isn't going to be seamless. And then once it is, each year we're going to be able to look back at, as a matter of fact, technically each second, probably we're going to be able to look and go, how much did we save? How much did we save the earth? How much environment did we save? Because we issued this on this public blockchain, which doesn't take a whole lot of energy to run, versus issuing it utilizing our own servers and phones and mail and paper and all that. What did we save? I think that's the direction they're trying to go, and prove that it can be done. Prove that they can issue a 3-year, $10.8 million bond and get it all done on chain without having to go through their old traditional systems.
Well, and one of the beautiful parts is that you have the underlying projects that are going in that are involved in it. As things evolve on those projects, everything's updated on the blockchain. So it's all on chain. You can get an update, as you say, by the second, right? And if some of these projects start, leaking or losing their validity, that's all updated. Otherwise, all these things, it's a pretty arduous process, but whether it's paper or however these things have to be relayed, and it's not very, it leaves a pretty big carbon footprint.
Yeah, and we need little stepping stones, right? We need someone to do this because you and I can talk, and I can talk to financial advisors, and I can talk to people all day about the transparency it brings, but none of that matters until you see it, until you actually do it. So the people that are going to invest in this bond are actually going to see that level of transparency. And once we start to adopt in that manner, and we'll talk about adoption in a few minutes, once we start to adopt in that manner, there's just no going back from it. You don't go back from, I get to see everything that's happening every second, to I'm only going to find out what's going on once a quarter.
So, Adam, while we're talking about SocGen, Societe Generale, they're throwing their hat in the ring as well, becoming the first big bank to list a stablecoin. But didn't JP Morgan also hasn't JP Morgan also got their own stablecoin?
Right. So here's the difference, Mehdi. JP Morgan has a stablecoin, but they use it just internally on their own systems. Right. So when I put in dollars, theoretically, when I put in dollars to JP Morgan, to Chase, they are basically converting that to their own token in the back end so that they can efficiently run their internal systems. They can efficiently do what they need to do from a financing standpoint, in kind of internally, investments that they're making, via JP Morgan, the investment bank and such. They're just doing that internally. What SocGen is doing is they're saying, we're going to issue our own stable coin. When you, Mehdi, put in dollars, or in this case, euros, sorry, when you put in euros, we're going to issue euro tokens against that, and we're going to make them publicly available. So they're actually going to trade on exchanges against Bitcoin and against ETH in Europe. And they built it to where it conforms with the regulations, the EU regulations. So this is not something where they're throwing it out there and maybe, the EU, maybe the government, the regulators are going to come down on them, like what happened in the US. This is something where they've made it conform with the regulations. And Mehdi, if we go back, this is kind of the original banknotes, right? This is what the Medici's did in Florence. It's, you bring in your gold and we're going to give you notes against that gold. And because we're the Medici's, you can go trade that anywhere you want. And whoever comes in with the note is going to get the gold. This is the original banknote. And we're going back to that. We're going to see more of this, where banks are going to get to create their own stable coin based on the deposits that they have, right? And that's what SocGen is doing. And as we said, they're doing it in a regulated way.
Digitization of assets, which is what we've been talking about for a long, long time over the last couple of years as well. So, this is great seeing this start to transpire, and it's simple, and it's the fact that it's not just locked in internally for SocGen clients is a groundbreaking move. So it's great to see that happening. So while we're on adoption, and our friends at Coinbase, who've obviously had a decent run this year so far, what's the stock up? Something like 295 odd % at the moment. So it's been a nice year for Coinbase. They're not sitting on their laurels. They're diving into expanding their wallet capabilities now. So this peer-to-peer payment system, which has obviously become more and more popular, with whether it's Venmo, Apple Pay, whatever it is. Now with your Coinbase wallet, you can send money through all these messaging apps, I guess, whether it's WhatsApp, iMessenger, Telegram, whichever one you're using, you'll be able to sit there and fire away some money using your Coinbase wallet connected to it. So, we're progressing, Adam.
Yeah, this is Coinbase again, just marching forward and marching forward. On one hand, you and I talked about how they're going to custody so much Bitcoin for all these ETFs. And then they go launch something that says, look, if you use our wallet, you're going to be able to send money. I'm going to be able to send you money, Mehdi. Like after we've, chatted on our, iMessenger, I can just send you some USDC. And you might go, okay, well, that's the same as Venmo or Zelle or something like that. But it means that, one, I don't necessarily ever have to have that money in a bank account. I could have gotten paid that way by someone else, and then I just send some to you through a messaging app, like as you said, something like something like we would see with Venmo or Zelle, except it doesn't have to go through the banking system. I don't have to ask permission to do so. I don't have to make sure that you have a bank that conforms to the Venmo or Zelle or PayPal process. You can be anywhere in the world. And if we're connected via WhatsApp or iMessenger, I can send you USDC. That's what Coinbase is offering. And that's going to be relatively revolutionary, because now what we're going to see is more along the lines of, I don't necessarily need a true bank. My wallet or my wallets can handle quite a bit of my transactions when I can just immediately send you money through a messenger app like that. And that's how we talked about previously with what SocGen was doing with bonds. This is wading into that water of, I can send you anywhere in the world, anytime, money that is not going from my bank to your bank, that is going from my wallet to your wallet. I can do that anytime. Once you start going that direction, it's really hard to come back. And we can look at areas like Asia, where they've been sending money through something like WeChat for years and years, and they're not going back, right? They're not going back to using cards and all that. They use WeChat. That's how they send money back and forth to each other. And sometimes sending money back and forth means I'm paying you for goods and services. Where, if we look at Venmo and Zelle here, they have pretty strict limits on how much can be sent. As a matter of fact, when I try to pay my rent, I can't pay my rent with Venmo or Zelle because the limit is too low. But with Coinbase and USDC, I could just hit a button and bam, my rent is paid. It's all on chain. That money never had to hit my bank account, and it never has to hit the bank account of the people I'm paying. So now what we're seeing is this kind of move away from centralized banks.
So Adam, I can hear the screaming in the audience of, well, what about the bad actors and these bad players? They can now send money without going through the banking system. Is there KYC? Is there any of this stuff going on? Like, what do we say to that?
Well, I say, one, okay, solve the problem then. Like, I don't think the fact that bad actors can move money around should be enough of a reason to not have innovation going forward. Right? You figure out how to solve it. If you're Chainalysis, the types of, or TRM Labs, the kind of companies that monitor this stuff, they can do it. I'm fairly certain the CIA and the NSA and the FBI can track what we're doing anyway on chain. I think they have the technology to do so. And when I have an iMessenger account, it's through my phone. My phone knows who I am. Google, Apple, everyone, Facebook, they all know where I am right now because my phone is sitting next to me. So yeah, obviously, we're going to be able to solve for that. We can't not move forward because we're afraid a few bad people are going to be able to move money back and forth. And it's still on chain. Again, we're still able to track every single movement of that money. It's just a matter of, at what point does it get to someone we know? And somewhere that person had to have a phone or have a WhatsApp account or have an iMessage or have a Telegram account or something. Somewhere they're going to have to do that. And we're going to be able to kind of know who they are. More importantly, we're going to know exactly where they are. If they're going to do it on their phone, this is better than who they are. This is, I know where you are right at this moment.
That's it. Think outside the box and figure out the peripheral stuff that comes together and actually pinpoints your location. So, it's all good, and innovation is coming. So, Adam, before we wrap, let's we've discussed Disney in the past in regards to NFTs and such, and how exciting it would be to bring some of their historical IP, whether it's Star Wars, Pixar, whatever it is, into the NFT universe. But it seems like now Dapper Labs is doing it. They're launching Disney's digital pin platform. And I think it's focused on Star Wars and Pixar, like we've talked about in the past. So it's happening, Adam.
Yeah, I can imagine this is how they're going to get my daughter into crypto, right? She loves Pixar movies, so I imagine there's going to be some collecting of these digital pins, and I imagine Disney is among the bet between Disney and Lucasfilm and all the Marvel and all that. Who's been better at figuring out how to capitalize on IP and merchandise and everyone? No one ever in the history is better than Disney. And so this is where there are going to be digital pins. I assume at some point that I'll get to utilize those digital pins if I go to Disney World or I want to watch something on Disney Plus or something like that. On top of that, the kids are going to be collecting them and trading them. So this is an instance of, Disney going, we're really good at merchandising, we're really good at capitalizing on IP, and now we're going to use this new technology to experiment and do the same thing. And by the way, we're going to get kids to be, using wallets and using NFTs as well, with Dapper Labs, who, was famous for creating NBA Top Shots, which was a huge sensation, and gave everyone that insight into what verifiable scarcity looks like. So when kids especially are going to be trading these digital pins, we're going to know exactly how many of them there are. We're going to know exactly which one of 1,000 my kid owns. And that's where, again, Disney is really good at this, and they've taken time to understand how they're going to utilize the technology. I'm not saying this is going to be the greatest thing ever. This is probably not the end of the road for Disney and NFTs, but this is them going further than just, we're going to give you, a profile picture that looks like your favorite Star Wars character. This is, you're going to get a collectible now, and it might go along with merchandise. It might go with a movie you've seen. It might go with a TV show you've seen. You've had to pay something and maybe you'll get it. Maybe having a certain amount of pins will mean you get certain privileges at the park. Whatever it might be, Disney's going to figure out how to do this.
Well, it's exciting. I love this. I love the Disney branding. I love the way they managed to extend that, the branding of every single one of their, characters. They've done such a phenomenal job on it, and it's really nice to see this all coming together. So good on you, Disney. Adam, as always, thank you so much for sharing your thoughts and your time.
Sure. Happy to be here, Mehdi. Thank you. And maybe next week we'll be up another 25% when we talk.
Well, I'm sure there's a lot of people out there screaming for that, quite wholeheartedly. So, if you want to learn more about Adam's courses, don't forget to sign up on digital assets and crypto education. It's interaxis.io. The link is down there. And of course, don't forget to subscribe to Your Finance TV. Thank you for watching, and until next time, good luck investing.